Hey everyone, welcome back to Corporate Decoder, the place where we unpack the stories hidden within financial filings so you don't have to. And today we are diving into a very interesting filing from Iveda Inc. This one dropped on August 29, 2025, and it's all about a vote from their shareholders. So what is this all about, you ask? Well, it seems like the company got shareholder approval for something pretty important. They held a meeting a bit later than usual to finalize some decisions from their 2024 annual gathering. First off, let's talk about who showed up and what it takes for a meeting like this to be official. Over 1.4 million shares were represented at this meeting. That's a pretty good turnout, representing about 58.5% of the company's voting stock. This means they had enough shareholders present either in person or through their proxies, someone voting on their behalf to make important decisions. This quorum, which is the minimum number of shareholders needed to conduct business, was definitely met. Now for the main event, shareholder approval for a plan to issue some interesting financial instruments called warrants. Specifically, they got the green light to issue 625,000 Series A common stock purchase warrants and another 625,000 Series A common stock purchase warrants. These aren't just random numbers. Think of these warrants like options tickets that give the holder the right but not the obligation to buy shares of the company's stock at a set price. This is a pretty big deal for the company's future funding and how its stock might be used. The shareholders gave a big thumbs up to this plan. The vote results show a strong majority in favour. Let's break down that vote. Out of the shares that were voted, a whopping 1,253,920, 3,921 were abstained, meaning those shareholders didn't choose a side. This overwhelming support means the company can now move forward with issuing these warrants. It's also worth noting what kind of stock we're talking about here. The company's common stock has a par value of just $0.00000001. Par value is a nominal value assigned to a stock by the issuing company, and in this case it's incredibly small, often indicating a focus on flexibility rather than a reflection of the stock's market price. The stock is traded under the symbol IVDA on the Nasdaq stock market. And as we mentioned, there are also warrants being issued which are traded under the symbol IVDAW, also on Nasdaq. So what does this all mean for Iveda Solutions? It means they're looking to raise capital or perhaps reward investors or partners by giving them the option to buy more stock in the future. The specific exercise price for these warrants is set at $3.44 per common share. This price is key because it sets a floor under which the company likely wouldn't want its stock to fall if it wants these warrants to be exercised. If the stock price goes significantly above 3.44 FIA, people holding these warrants will be motivated to buy the shares at that lower price and then potentially sell them at the higher market price for a profit. This is a standard way if a company likely wouldn't want its stock to fall if it wants these warrants to be exercised. If the stock price goes significantly above $3.44 FIA cents per common share, this price is key because it sets a floor under which the company likely wouldn't want its stock to fall if it wants these warrants to be exercised. If the stock price goes, po default thing, these warrants will be motivated to buy the shares at that lower price and then potentially sell them at the higher market price for a profit. Now, looking at this filing from a broader business perspective, it's clear that Iveda Solutions is actively managing its capital structure. Approving the issuance of warrants shows a forward-thinking approach to potential growth and financial flexibility. It's a signal that the company is anticipating or planning for a future where its stock price could rise, making these warrants valuable. Are there any risks involved? Well, issuing warrants can dilute the value of existing shares if a large number of warrants are exercised and new shares are issued. This means that the ownership percentage of current shareholders would decrease. The company also needs to make sure it meets the conditions for these warrants to be exercised, which likely means achieving certain growth targets or milestones. We don't have detailed financial performance data in this specific report, but this move suggests a certain level of confidence in their future prospects from the management, and importantly, you can see that from the shareholders would decrease. The company also needs to make sure it meets the conditions for these warrants to be exercised, which likely means achieving certain growth targets or milestones. We don't have detailed financial performance data in this specific report, but this move suggests a certain level of confidence in their future prospects from the management, and importantly, you can see that from the shareholder vote. To sum it up, Iveda Solutions has successfully navigated a crucial decision point with its shareholders, securing approval for the issuance of stock purchase warrants. This is a tactical move that could provide a significant financial boost or strategic advantage down the line. It highlights the company's proactive stance in managing its growth and capital. What are your thoughts on these warrant approvals? Do you think this is a smart move for EV Solutions? Share your opinions in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more insights into the world of corporate finance. And don't forget to join our Discord community for more discussions linked in the description. Thanks for watching. See you next time.